Oh, welcome into a daily editorial here on the KE Report, chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, instead of starting out with the metals like we usually do, we will get into the metals later. Let's look at interest rates, because interest rates in the recent past have been generally moving higher. We have the 2-year at about 2.76%. Even the long end, the 10-year and 30-year have been moving higher. Yes, we're still seeing a relatively or very flat yield curve, but the fact of the matter is rates moving higher, which is, I think, only going to further give the Fed room to continue to hike rates, albeit I think a lot of people are finally coming over to that thought as well. What do you have to say about this general upward trend in terms of rates?
Well, I think the key here, Corey, is to look at the 10-year yield and the 30-year yield. First thing I should say is basically since it appears, I want to say February, especially for the 30-year yield, these yields have been consolidating. So they've been consolidating for more than a few months. The 30-year yield twice in the last several months bounced from its 200-day moving average. So that's encouraging if you're looking for, a big breakout there. The 10-year yield has been stronger. It bounced from its 200-day about a month or two ago. And the 10-year yield back in the spring, it did temporarily break above 3%, but that breakout failed, but it wasn't a complete failure. It just fell back into a consolidation. So the 10-year yield and the 30-year yield appear to be in bullish consolidations, and at some point these could potentially break out before the end of the year. The 10-year yield is much closer. It was at 2.98 yesterday. I don't know, what weekly or monthly close it needs. But the 30-year yield, that's really the key for me. And yesterday it was at 3.13. Its strong resistance goes back to 3.25%. And if that could break above 3.25%, that would get to about a 3 or a 4-year high. And I mean, that would be very significant because that's the long bond. So looking at these two yields, that's really the question. Are we going to see a big breakout by the end of the year or by early next year? And if that happens, we could see an increase in inflation expectations. And maybe that would benefit precious metals. It really depends on some other things that are going on. But as we were talking about beforehand, Corey, this is really, it could be because of some stronger economic data. So it looks like we might see some wage pressures, and nominal GDP is ticking up even more. So interesting things to watch here as far as long-term interest rates. And of course, short-term interest rates, the 2-year yield, as you noted, that's a proxy for the Fed funds rate. The Fed funds is only at 2%. The 2-year yield has been screaming higher for a while. And as you said, I think that's close to 2.8%. So we're definitely going to see a couple more hikes out of the Fed. I mean, the one that's coming up in the next couple weeks is a formality, and then one in December. That's probably going to happen as well. So the question is really what happens beyond those two hikes.
Yeah, I think we do need to very much look beyond just what's happening this year with the Fed, and I think the Fed is going to continue down this road of hiking rates, and what we do need to focus on is when they consider that neutral rate to be reached, and therefore then they stop their rate hikes. But right now, that is the progress of more and more rate hikes, and you even pointed to some of the recent economic data that I think is further pointing to more rate hikes, and which could very well have some upward pressure on yields. Let's also look at what's going on in the U.S. dollar today. The U.S. dollar going through a bit of a drop. It's not selling off significantly, still very much staying within this higher range that it's been trading in. But any concerns here for the dollar that you have, Jordan?
Not really. I mean, there was resistance around 95.5 or so, and the dollar failed to get through that level. And that's a bit of the reason why it had a big drop today. But in recent weeks, I mean, we've been thinking that the dollar is still in correction or consolidation mode. So today's big drop is a bit of a surprise, but in the larger context, not really. I mean, looking at the technicals, the dollar is still well above its long-term moving averages, which are sloping higher. So the 200-day moving average, I believe that is around 92 or 93. I don't have it in front of me, but the dollar is trading at 94.34 now. And I mean, there's a lot of support around 94 or a little bit below, and then there's strong support at 93, and those levels are above the 200-day moving average. So the primary trend for the dollar remains higher, but zooming in from a short-term context, it's correcting and consolidating, and there's there's a little bit more room for it to drop. It's possible it could drop down a little bit more, maybe all the way down to 93 before it rebounds. But larger trend, still good, but short-term correction, consolidation, that figures to continue.
Yeah, sorry, I was just muted. My bad. So, Jordan, in terms of a dollar decline, if it does pick up steam, let's put ourselves in the bearish shoes now. What level would the dollar have to drop to that would turn you more bearish? I'm not saying that I am bearish, but I'm just curious at what levels you would be watching for.
It would probably be below the 200-day moving average, which I believe that is in the mid 92s. So that would be the level. If it loses that, that would be significant. And also, there's just looking at the chart, there's based on the price action, there's pretty good support at 93. So I think the dollar is likely to hold 93. I mean, you could see I know the dollar's been slow. I mean, it's been moving higher. Excuse me, the 200-day moving average has been moving higher. And at some point in the next maybe month or 2 or 3 months, that's probably going to hit 93. So I would not be surprised to see the dollar test 93 and come pretty close to the 200-day moving average. But if it loses that, then it would be in for a more significant decline.
All right, now let's look at the precious metals. One interesting aspect about today is we're seeing GDX and GDXJ continue to garner a buy. Both of them are up right around 3.5% now. They even started moving a little bit earlier than when gold started moving today, and gold is up, but only about $7 or $8 right now. What do you think? This bounce in GDX very much due, but is this the start of a much larger move?
That's a great question. I would say very possible. I mean, I've been looking for GDX and GDXJ to trade down to, I want to say, about 4% or 5% lower than where their low ticks were yesterday on Tuesday. So it's interesting because, as I said, I was looking for these to go just a little bit lower. And after such a strong move today, even it looks like, as we're speaking here in the last 20 minutes or so, it looks like they've both picked up even more steam. I mean, it's very possible that this could be the start of the rally that we've been looking for. I mean, it's something I mentioned last week. However, after a day like today, the question is, how much more upside do these things really have? And I would say, minimum they could probably get to the August highs, which is about 1950 for GDX and 29 for GDXJ. I'm rounding up for GDX. So I don't know exactly, GDXJ is already close to 27.5, and there's resistance at 29, as I said, the August high. There's a gap above 30. I really don't see GDXJ going above that gap that's kind of in the mid 30s. And the same gap for GDX is well above 20. So this could be the start of a rally, but I'm not sure we're going to see that big of a rally in percentage terms from here moving forward. So I guess I would, if I was a bull, I would temper my expectations a little bit, definitely after today. So that's really the question for me. Okay, how high can this go, and how long does it last?
Yeah, I think that's the important question for all investors is how long can this rebound go and how high can it go? But there definitely are some short-term resistance levels that we do need to be paying attention to, and if it does only run up to that August high, say for GDX, that's really nothing that special, and still I think keeps it in very much this downtrend once it started to break down. But hey, Jordan, not much more to say now other than I think we're watching to see just how far this run in GDX can go. Hopefully it gets back into that range that it was in for, well, over a year and a half, but a lot of work to be done. Jordan, good chatting with you. Thanks for taking a look at some other markets outside of the metals today. Have a great rest of your day.